Hey traders, Akil Stokes here, head currency trader with tradingpower.com, and welcome to my weekend review video. This is going to be the last weekend review video of the year, and well, I have a lot that I want to cover, including what I think is my best trade of the year. I also want to talk about why traders fail, and lastly, what you could be doing over the holiday break that's going to set you up to have a fantastic 2015 of trading. So grab a notepad, grab some coffee, and I'll see you guys for this week's weekend review video. Hey guys, welcome back to a weekend review video again. My name is Akil Stokes, and I want to start off by just saying thank you so much for supporting my page this year. If you're watching this on somewhere other than the YouTube channel, do me a favor, go ahead, go over there and subscribe, like, and share. Your support means a lot. I had a goal this year to get to 5,000 subscribers. I'm a little short of that right now, but I think I can still make it, but it's going to take help from you guys. So do me a favor. If you like what you see, hit the like button, share it. And of course, if you're not subscribed, go ahead and do that. There's no harm in it. And you get updated whenever I put out something new, like this week's chart of the week video. Now, there's a lot I want to cover in today's video, as I mentioned earlier, so let's get right into it. This week was an excellent trading week. I think between Jason and I, we definitely eclipsed over 500 pips in the live room, and a big help, or not in the live room, in the syndicate, and a big help to that was a ginormous trade I had on the pound yen, which is I think probably my biggest trade of the year. Now, I'm going to show you this trade. Take a look at this. Here's a video I shot to the syndicate members the day before the trade came out. Take a look at the basic setup of why I took the trade. Then when we get back, I'm actually going to turn that into a lesson and tell you why most traders fail in this industry. 182.12's around that area, wherever that 886 lands. So that's first and foremost. Bat pattern completion right inside that structure zone we talked about. And we're past the previous support level, but we're in the middle of the one below it. Now, we are also going to have a bat pat or a butterfly pattern completion as well if we take a different X leg. You guys know, well, for you guys that have been through the course, you guys know I trade butterflies a little differently. Again, this is not quite a training lesson, so I'm not going to take an hour to explain it to you, but I'm looking for a Fibonacci inversion from our X leg back to our A leg, or excuse me, our A leg back to our X leg. I'm looking for a 127 inversion of that. And I'm looking for a Fibonacci extension from our A leg to our B leg. And I'm looking for a 1618 Fibonacci extension. And you can see if we take a look at this zone between my 127, my 1618, and my 886, we've got a pretty good level of Fibonacci confluence in here, meaning we have a handful of Fibonacci retrace mix extensions lining up at the same zone. So we've got a potential butterfly pattern. Okay, so here's another look at the pound yen trade real time, and you can see, well, after our initial entry, this thing just rolled up. In fact, we grabbed about 250 pips of profit on target one, and currently sitting up to just under 400 pips on the remaining part of our position. So a pretty good trade here. And well, we had a conversation today in the live room about advanced patterns. It wasn't specifically based off of this trade, but just in general about advanced patterns. And well, Akil, if advanced patterns are so black and white, so easy, meaning that the rules are sitting right there in front of you of what it takes to trade it. There's no real, there's not too much discretion to them. If it doesn't do this, then that's not valid. If it does do that, then it's valid. It's pretty simple. And if the rules are that simple, the trader asks, how come so many traders fail? And my response was, well, it has nothing to do with the system or the strategy. It's all about what lies between the 6 inches between your ears. And it's the brain, it's emotions, it's trading psychology. And I'll use this as a perfect example. Now, looking on the 4-hour chart, it looks as if this trade was pretty pain-free. I mean, the market spiked down. We came down to our completion level, which was right around the 82 even handle, a little bit above that. And we shot right up to profit, right? Boom. The market went 400 pips straight up from 82 to 86. Easy. Not so fast, my friend. If we take a look at this on a lower time frame, I'm going to highlight this zone. if we take a look at this zone right here from where the pattern completed to where we hit first targets, and actually I'll draw a line here. First targets came about right here. Let's take a look at how difficult this trade actually was. All right, so we're down on a 5-minute chart on the same trade on pound yen. Again, our entry was about right above the 82 even handle. Let's call it 82.14. What I'm going to show you is what most rookie traders, or what most newer traders, I guess I shouldn't say newer, because there are a lot of traders that have been doing this for years and years and years. I'm going to show you what, I hate to say it, but what the losing traders are doing. They see our initial entry here at 182. They enter the trade, they execute it exactly how they're supposed to. However, as soon as they're filled, the market spikes down about 50 pips. Now, I can guarantee you this. Why? Because I work with a lot of traders on a regular basis, and they tell me this. There were a lot of traders that exited the position right here. They said, Akil, I entered. It went against me right away. There was too much momentum in the market. There was too much news coming out. I just wanted to cut my losses. Instead of taking an 150 pip stop loss or whatever the stop loss was on this particular trade, I figured if I get out for 50, I'm saving myself some money. False. But this initial move scared out a lot of traders. Then we went from minus 50, for those who were brave enough to stay in it, we went from minus 50 and we essentially shot all the way up, boom, about 150 pips. So really quick, you went from 0 to 150 really, really quick on this trade. And for a lot of traders that are not used to seeing that, they start taking profits at this mark. They say, you know what? My target is about 250 pips away, but I'm up 150 pips. They start seeing that 150 as being money in their pocket. They say, you know what? I'm just going to take it out here because, that's enough. That's more than I've gotten before. And we even get some traders that make excuses. Well, Akil, it looks like it's at a 786 from this last move. So Fibonacci, and then we have structure looking left. The market will probably reverse here, and I should just exit the entire position. Keep in mind, this is a 4-hour trade that they're watching on a 5-minute chart. Again, believe it or not, people do this. So we get the first group of traders that exit initially. We get the second group of traders that exit if they make it this far when they're in a little bit of profit, but not all the way to their target level. Then what happens? The market reverses down, and you get traders that exit at break even. We went from all the way to 100 pips to minus 50, up to 150. Back to break even. You see, it's a yo-yo effect that can be damaging to traders. Just picture yourself in this position. I know some of you did trade this, but for you guys that didn't, picture yourself in this position. And I'll admit, it's tough. It's hard to get yanked back and forth. There's so many emotions. The emotions of being down, then being up, and then being back to break even. It's tough. And you'll get a lot of traders that exit their position at market here. They say, you know what? The move has been made. I missed it. I would much rather exit at 0, a scratch trade, than take a big loss on this. For those traders that maintained, well, we were rewarded as the market rose up about 100 or 250 pips to target 1 and is now sitting, again, almost 400 pips in profit as we continue over. But you guys can see how difficult it is. And you ask the question, how come 90% of traders fail? That is why 90% of traders can't handle that. It's not too hard to get the strategy down. 90% of traders can't handle those emotional tugs. And what happens is, as they slowly sabotage your trading, it's going to mess with the expectancy model of your strategy. For you guys that aren't familiar with the backtesting process, we do our back testing to build our RAS, reticular activating system, but we also want to see the expectancy of our trading strategy, meaning that we want to take the average win, we want to take the average loss, and we want to look at that and how it performs over time. And if that model is profitable, then we know it's a strategy that's worth trading. Now, if you have a strategy that's worth trading and you're sabotaging yourself, even if it's doing something as small as taking targets, 10 pips earlier on every trade, well, I'd like you to redo your math on your expectancy. And a little bit like that over time can turn a very profitable system into a break-even strategy. into even a strategy where you're taking a loss. So it's, there's a lot that goes into it, but most traders fail because of up here. And I don't mean because they're not smart enough to trade. They're just not disciplined. And they don't have the right set of psychological tools to handle what happens in the market. Now, piggybacking off that topic, I got an email from a trader during the week that asked this. He said, Akil, is it normal to take 2 steps forward, 2 steps backwards, 2 steps forward, 2 backwards, and go nowhere for months? Lately, I've been finding it hard to make profit. I've been making money, then losing it, and then making my drawdown back, then losing it, et cetera, et cetera. Just wondering if this is normal, or am I doing something wrong with my money management? I'm guessing you're telling me to do your 12-week transformation course. I would love to join, but just don't have the money right now. And the first answer to that question is just what we talked about. The first thing you always want to do when you're analyzing your trading is you want to ask yourself, is it me or is it the system? Meaning, one of them's wrong. There's a fault somewhere in there. Either your system is wrong, either you're trading something that just isn't profitable. And if you are, it's your fault for not back testing it and making sure it's profitable. Or you're trading a system that's profitable, but you're somehow sabotaging it, like we talked about in the pound yen. Either you're moving stops and taking bigger stops than you're supposed to, or you're taking targets earlier. Either way, it's on you, right? You guys get it? Akil's message or lesson of the week. It's your fault. I'm sorry if I offended you, but it is. And someone had to tell you. But there's also a few other ways you can handle it. Say that you aren't making any trading mistakes. You're not taking targets off early. You're not entering trades you're not supposed to. You're not rolling or moving stops back, so you're taking bigger losses. What I told this trader was the next step is to really realize and find the difference between a trading opportunity and a high probability trading opportunity. And I used myself as an example. At one point in my trading career, I only traded ABCD patterns. Why? It was the absolute easiest thing for me to do. I wasn't strong on reading price action, wasn't strong with structure, but I knew how to draw a line. I knew how to copy and paste that line, and I knew how to connect it to another line. Simple stuff. But hey, that's where I was at in my career. But I used to trade ABCD patterns, and I didn't make any mistakes. I would put a limit order right at the decompletion. I would get stops, a certain pip amount above that completion, and I was very consistent with it. Very, very consistent trader. Unfortunately, I was consistently losing money. And what you want to do in a scenario like this, and this can be for any strategy, is you want to ask yourself, is this a high probability trade? And if not, are there any filters I can add? And what I started doing was I started adding filters. Instead of just trading ABCD patterns, I would only trade ABCD patterns that came in that previous structure. Then, instead of strictly selling at market or putting a limit order there, I would only trade, I would wait for a retest. So I would only trade ABCD patterns at structure that had a double top. And I would only trade that double top if the RSI was overbought. So you can see I started adding filters. For you guys that are familiar with the CTS system, the combined technical score system that we teach, it's no different than that. You're going through that checklist and you're adding filters of what you need to trade, and you're really building a case for entry. So if you find yourself just going back and forth between making money to break even to losing money to break even, one of the first things you want to do after looking yourself in the mirror and see if you're making any mistakes is start adding filters. See, go back through your trades, go back through your last year of trading, go back through the back testing. Start looking at the trades you took and say, hey, well, if I would have waited for a double top on this trade, would I have entered this in the first place? And what a lot of you guys believe, and it's the internet's fault because everyone on there is selling you a system that will make you 50% a month. And, that was a topic for today. And I'm not going to get into that because that upsets me a lot. 50% a month. Yeah, right. Consistently. Anyway. Most of the stuff you hear on the internet, they want you to believe that the way to be more profitable in trading is to find more trading opportunities, take more trades, get more signals, right? Enter more positions. It's probably brokers telling you that, because brokers get they get their cut off the top. So they want you to trade more. That's how they make a living. The real gem to increasing your account, aside from implementing a money management system, is really just filtering out some of those losses. It's really addition by subtraction. You don't have to find any extra winners, but if you keep yourself out of some of those losing trades that were just looked like a good trade and you kind of just took it, to take it, you're going to find your account growing much faster than you think by eliminating those losing trades, only looking for those best case scenarios. So that's my advice for that. And guys, that's a writer downer. You get 2 weeks before the break. This is the time for continued education. Go back on your system, see if you can add anything to make it more efficient, eliminate some of those losses. Now, another way to deal with losses is also implementing a new strategy. And a lot of traders I work with only trade advanced patterns, and there's nothing wrong with that. I always talk about trade one strategy to start with, master that strategy before moving on to something else. But if there's anything we know about advanced patterns, is that they're really swingy, meaning that we get a bunch of winning patterns at once, and it brings our equity curve all the way up. And then we hit a streak of losing patterns, which is going to put us in drawdown. Now, the drawdown shouldn't take us to break even, because of our risk reward and the win percentage. But still, it's you have up months and you have down months, or you have up weeks and down weeks, and it can get a little frustrating. One of the ways to smooth that out is really implementing a new strategy, and it can be a structure-based strategy. Support, resistance, trend continuation, something like that. You guys should be knowing the basics anyway, but being able to identify structure, being able to trade a different way, while you're in one of those losing streak of patterns, you can save yourself some money, because you may get hot on trend continuations. After all, patterns tend to fail when the market's trending. Trend continuation trades tend to work very good when the market is trending, hence the word trend continuation. But this week in the syndicate, we gave I gave a good example of two trend continuation trades, or two structure-based trades that actually paid off pretty nicely. Actually, one was in the syndicate in the form of New Zealand dollar, which well, check it out. A 618 retracement is going to put me right here at 77.96, right below that 78 even handle. And what you'd be looking for is a move down to retest previous structure. So if we're looking at a risk reward, we're looking at stops. You may not get the best risk reward in this. Stops need to be above our double top structure. So stops need to be above this wick here. And initial targets, you're looking for a retest of our lows here. So if you take it right at the 618, you're not going to get the best risk reward. We're still really early in the trade, so a lot of things can happen. Price action may spike all the way down, and we may have to adjust our fibs. But one thing you can do is, I don't like adjusting stops, but you can adjust targets. So instead of taking it right here at the 618, you might want to wait till price action gets a little bit higher, say closer to our double tops here. Your stops are going to remain the same, but what it's going to do is going to stretch out your targets. And we talked a lot about this, I think a week or so ago, about ways to make the not in the syndicate, in the live question and answer on Mondays, just ways to make the trade work for you without really going against your trade integrity. So now in the video, we talked about New Zealand dollar. We talked about this structure level up here, price action breaking, closing below, simple week 1 12-week transformation theory. Lower low, lower close, trend continuation, blah, blah, blah. Basically, we got a 26.18 trade. We got to retest the structure. We looked for a short opportunity there when we rode the market down about 95 pips to target 1, and we came very, very close to you would have hit target 1, target 2 if you took this like a 26.18. I'm actually holding out for a little bit of a bigger move, which I may not get, but we got a pretty good move, almost 100 pip move on this just by simply following structure. Looks like we got an advanced pattern after that as well, with a Gartley pattern right in here. And this was, again, you can do this on any market, any time frame. In fact, last week was the first time I implemented my chart of the week idea, and we saw a very similar situation with the Euro Aussie. Monday. Let's go one more time frame down and see if we can find a place for entry. Now, first thing I want to do, and I'll do this real quick, I always want to bring a Fibonacci extension on. So let's take a Fibonacci extension from our swing low to swing high here, see what we get. Boom. Going to get a 127 right in that structure zone, so right at previous structure resistance up here. And let's do this. Let's take a Fibonacci inversion. So let's invert this inside leg. Let's go from here to here. And let's see if we get, look at that. 1618 Fibonacci inversion lining up right with a 127 Fibonacci extension. So if we come up to 6150s, I think that's an excellent opportunity to look for a sell. So it was actually the Euro New Zealand. I said Euro Aussie by accident. That's what happens when you got so many pairs in your portfolio. But you can see very similar to that New Zealand dollar situation. We had our 2618 up here, our double top. And it played out like clockwork. Actually, I was a little bit wrong here. My projection was that we would stay in this consolidation area and bounce back and forth. As you can see, that didn't happen. We actually hit the Fibonacci cluster dead on, and we ran all the way back down to previous structure low. So you probably made more profit than you expected. I'm sorry for that. I forgot who asked to share this chart, but if you would like, I'll share my address with you. If you want to mail me a check for pointing this out and helping you get on the right side of the markets, I will accept that donation. Just kidding. But seriously, guys, structure stuff works. We had a handful of trades like this as well, and it's something to do. It's at the base of everything, including advanced patterns, and it's something also that you can use when advanced patterns aren't forming. Remember, advanced patterns, it takes 5 waves to form that pattern. We got to get a move down, X to A, we got to get an X to A, we got to get A to B, we got to get a B to C, we got to get a C to D, and then that C to D has to roll over. In the meantime, there are plenty of trades you can take while you're waiting for those bigger trades to open up. So I hope you guys learned something from this week's weekend review video. Again, it's the last one of 2014, so I wanted to give you guys a lot, especially knowing that, for the most part, you won't see me until January. Now, syndicate members, as promised in last night's syndicate video, I will mail out the link and the password to tomorrow's live room session. We're probably going to take a little earlier break. That way we can still join Jason for his war room meeting in the morning as well. But my plan was to talk a lot about what we can be doing over the winter break. What can you be doing to improve yourself? To what type of continued education or training can you be taking? And I don't mean training by a training course, but how can you work on your trading so that 2015 can be a lot better than 2014? So if you have any ideas about that, bring that to the live room tomorrow, as I'd love to discuss it with everyone. For the rest of you, I will see you guys in 2015. Again, I appreciate the love, and yeah, it's been a good year. It's been a good year. So good luck, happy holidays, Merry Christmas, Happy New Year's, whatever else is in between there. I'll see you guys in January. Until then, plan your trade.
you.